All right. Well, welcome to our episode today of Insurance Gone Wild. I am your host, Dennis Settlemoir, accompanied by our co-host,
Stephanie Linchoni.
Dennis and Stephanie. We are doing everything we can to help people understand about insurance, the ins and outs, the ups and downs, the highs and lows, whatever it may be from a consumer perspective. And so this is our talk today. And we were talking off camera as well. What are we going to talk about today? And you had mentioned, why don't we talk about homeowners insurance? Because everybody is interested in that.
Yeah, interested is definitely a word. I think panicked could be another word.
Panic, pissed,
stressed, pissed.
Could be a word.
Just irate. So lots of fun words to describe people's feelings about homeowners insurance, specifically in Texas. I think it is going up probably all over the nation, but we are across the nation with a lot of different products, but home and auto, we're pretty specific to Texas. And even within Texas, you have completely different markets. You go down to, we're in the Dallas-Fort Worth area, you go down to the Houston area, and it's a totally different market. You go outside of the 6-7 major counties in North Texas, and it's a different ball game too. And so that is a pretty regionalized topic. So if you are in the Dallas-Fort Worth area, then yes, this will pertain specifically to you, because we may end up having listeners that are outside of that area. So
that's right. Homeowners insurance is a tough, did I say tough? Market right now. Yeah. We have over 40 home and auto companies that we can write homeowners through.
Have or had?
That's what was going to be my next thing.
Yeah.
Right now, we probably have more homeowners policies that were markets that we can write policies through than, I would say, well over 90% of the other agencies that are out there. We have I wouldn't say 100%, but well over 90%. And we are down to probably 5 or less. What do I mean by that? Yeah. That means not on auto's still fine, but the homeowners portion, that means that those companies either have quit writing in North Texas, or they have made
they will purposely price themselves out.
Well, they'll purposely price themselves out, or they'll make the underwriting rules so tough that they don't want any business. They just don't want the business.
They don't want new business right now. They're trying to just ride the wave until it can calm down. They can get their bearings again.
Yeah.
And then they can start taking on more risk.
That's true. But I think they've been kind of doing this for the last couple of years.
Yeah.
And I think that there's a hope amongst us agents that have some experience. When I say that, we're really thinking that 2025 things may start leveling out a little bit,
which is always so adorable to me, like coming from the non-focusing on home and auto side. Because you guys have been so hopeful for so long, and it's only gotten so
well. You have to be if you're in this industry.
No, absolutely. Yeah, we're drinking.
It's either that or an alcoholic, one or the other.
Yeah, and
sometimes it's both.
Can you? I was going to say, can you be an overachiever and do both?
Yes, you can.
Yeah, that'll be lovely. But it has, and it's like, and I just remember end of last year, like, this is just going to be, it's going to be better. And then, Chris is like, it's going to be better. Like, everyone's like, yes, it's going to be better. And I know you have to, I don't know, but it's not better.
Yeah. Well, you're looking at,
we'll see.
When we're looking at industry numbers, it's tough. It's tough. When you look at each individual insurance company, and we talked about this in another episode of what, why are rates going up? And we'll talk about it again, just real quick. But, rates are going up because of COVID, because of the freeze, because of fires, because of hurricanes. And you think, and some people in North Texas go, well, we didn't have any of that.
Because of hail.
We had wind and hail.
And then you can be like, oh yeah, okay.
We had wind and hail. Oh yeah, that's right. But these insurance companies, you got to remember, I think people don't understand that these insurance companies, they spread that cost out, not just through your neighborhood, but throughout the state or states or the entire nation. And whenever they're seeing losses like they're seeing, the fires out in California, the fires here in Texas, that don't get a lot of news, but they're still out there and they're still destroying homes.
Happening. Yeah. Absolutely.
There is a website I mentioned before, and I can't remember the name of it off the top of my head, that I have it saved in my computer as a bookmark that I can go to and look at any wildfire that's going on at any given time in the United States.
Oh, wow.
And on average, 200 or 300 on average at any given time. And some are, I mean, they're
now,
all
is that
over.
Specifically wildfire, like truly a fire that,
it's
that is
wildfires.
uncontrolled? Because they do have some, like what California used to do, and they don't anymore, which is insane, which is why they're having so
It's
many
not
issues
house
lately.
fires.
Well, no, not house fires, but they used to, it was the forest control. It was how you maintain the forest.
Oh, you're talking about controlled burns?
Controlled burns.
No, I don't believe this is not controlled burns. No, this would be things that were uncontrolled burns. But they're not all big.
No,
it's just been reported.
I was just wondering if that was.
But there are some that are big. Yeah, there are some that are big. We typically hear about the really big ones.
One
in New Mexico
we in Texas are hearing about it, then it's big.
Well, even the one in New Mexico earlier this year, it was tens of thousands of acres. We hear about the ones in California, but there's ones happening in Colorado, the Dakotas, Nebraska, Wyoming, others in New Mexico. There might be some in Oklahoma, or certainly some here in Texas.
Right.
And so those add up, and the damage that they do, it could be to crops, it could be to property like homes or autos. All that adds up. But let me back up. It's not just the wildfires that are causing the problem. It's everything involved. The cost of labor has went up to repair things. The cost of goods sold has went up to replace things.
Yep, the materials.
And so what is happening is that, and I know my clients or our clients don't necessarily want to hear this, but insurance companies have been losing money. And for the last 2 or 3 years, and they cannot continue to lose money. But there's other stuff. Natural disasters are becoming more and more prevalent. And some people are saying, well, it's due to
climate change. It doesn't matter. That part doesn't
climate
matter.
change.
It just matters that it's happening.
It's happening. Whether
regardless of why it's happening.
Whether you believe in climate change or don't believe in climate change, it's happening. I tend to think it's because we have more people. We're building houses in places that never had houses before, and we've got people living in places never been. But worldwide, it's happening. It's not just here. And I talked about this in one of our other episodes that, there's insurance companies have insurance companies.
Right.
They have insurance called reinsurance. Well, these reinsurance don't just, they may reinsure a domestic company, but they may also be doing it internationally, and they're seeing it everywhere. And so they're raising their rates, which makes your insurance company raise their rates.
It's the whole, the trickle down. And then
trickle down, correct.
Something else to keep in mind too, and I know you have people who are like, well, that's not my problem if they're insuring other things, but you have some companies that are very specific to personal lines.
Mm-hmm.
Home, maybe they do auto, maybe they don't do auto. We had some carriers and they're like, we don't touch auto, we only do home.
Mm-hmm.
But you have other carriers that, yes, we do home and auto, we do personal lines. Oh, but we do commercial. Oh, but we do this. Oh, we do marine inland or whatever it is, inland marine, whatever it is. But so it's not just what's happening to homes, it's what's happening to overall, anything that they're insuring.
Yeah.
And anything that they're supposed to be protecting. And so, and again, an insurance company, we just have to remember it is a business, right? It's a business. And so if I pay $3,000 a year, which man, would that
wouldn't you love to see that again?
Would be absolutely amazing. But if I'm paying my $3,000 a year, which let's be more realistic, if I'm paying my $27,000 a year in homeowners insurance,
have you gotten a quote lately?
Yeah, and I'm not that far off. I'm not that far off. Mine is now 6. That I promise you, folks, don't live in an amazing. I love my house, but it's not worth $6,000 in coverage. But that's okay. That's the market. But when I pay $6,000. I got to tell you, if I make a claim, you damn sure better pay it. Right. And that's what you're wanting. If you're paying the money,
that's right.
If they don't come through at the end because they're like, ooh, sorry. Well, I know we charged you $3,000 when we should have charged everyone $6,000, but now there's no money in the kitty to actually repair your roof and replace it, or to replace your home from a fire.
That is a great point. I had that happen.
It's a business.
back in 2011, 2012, they're both, I think it was those 2 years, either 10 and 11 or 11 and 12, where we had major storms come through the middle of Dallas-Fort Worth. And when a major storm that produces tornadoes and strong wind, when it comes through the middle of town, it's usually
it's ugly.
It's rough.
It's ugly. Yeah.
It's a big storm. And I remember we were in Irving and we watched the funnel cloud go over the top of our building, and then it hit somewhere around Northwest Highway. But I remember that, and I remember that there was a couple of insurance companies who had come into the market that were really inexpensive. And they actually went bankrupt as a result of those storms. That's what happens. So what happens when a company can't pay its bills? It gets taken over by the state.
Which, by the way, isn't that a fun process?
Yeah. It gets taken over by the state, and the state stops everything and just pays out claims and closes out the company. That's it.
Yeah. But again, not that any claim is a fun process, because obviously something that has happened, and then it's just, so you're dealing with an emotional thing, and then it's also whatever. But
no, I'll tell you a flip side.
But you get the state and anything government involved touching it, brutal.
Well, yeah.
And you're not getting the full amount because they don't really care. They got to write a check and do something it's brutal.
What they do with the trash can, or not trash can, the gas can, whenever the government got involved. So you may not know that, but they screwed the gas can up bad. It used to be a really easy process to use a gas can. Now you got to be able to stand on your head and,
Really?
Oh, it's crazy. So, but anyway, let's get past that.
So hang on. So I'm going to cut you off for a second.
Okay.
To get focused a little bit more, targeting to the consumer. So that's a little background of, hey, this again, reminder of why things are going up and all of the things. What are some options and how can people navigate that? We can't necessarily fix the rates, right? We can shop as much as we can shop. But then how do we help say, okay, I can't afford $6,000. So how do I get it down, but I don't get totally screwed if I have to make a claim? And we have a few products that actually can help fill those gaps.
That's correct. We do.
So talk to me about those.
All right. So, what Stephanie is referring to is some what we call ancillary products that I have went out and looked for to help offset cost to the client for home and auto. Specifically.
It's all about Dennis.
Specifically.
No, it was you.
But I did do it.
I know. And thank you, Dennis. Jeez.
But no, one is a program that is a deductible reimbursement. So what that does, let's say that you have a home that you have, and I will tell you this, that most policies on homeowners now are 2% deductible. What does that mean? That means that if your line item on your home says coverage A dwelling is 300,000 or 600,000, whatever the number is.
Use a number. Let's say 300. We're going to say it's 300.
It's usually 2% of that number. So at 300,000, it's $6,000 deductible.
That is, yes. And this is specific to wind and hail, because you can have a separate deductible for inside. So this is very, very specific to wind and hail, which ultimately is
most of our
hail.
claims. Most of our claims in North Texas are wind and hail.
That is.
So, and it could be 3%. Which in that $300,000 would make it $9,000. So what we have discovered, or what we have found, is a program that is a reimbursement program. Let's say you have to put a new roof on, and that roof cost you $6,000 out of pocket because that was your deductible.
Yeah, so let's just using numbers. Follow along, folks. $30,000 roof is the total cost to replace all the damaged things of the roof, get you a brand new roof. The insurance company is saying, yes, we will pay you $30,000, except we will not pay the $6,000 because that is your portion first. So that's the deductible. So ultimately the insurance company, the insurance company is writing a check for $24,000.
That's correct.
You are then responsible in paying, as the homeowner, are responsible for paying the remaining $6,000 to the contractor.
Correct. That is correct. And there's a lot of ifs and buts in there.
We're keeping it clean.
but we're keeping it clean for this example. We could get into other stuff, but so let's say that they're going to pay the $24,000, you pay the $6,000. There's 24 and 6 is your $30,000 for your new roof. So this one program will reimburse you once you pay that $6,000 and show you paid that $6,000 and have documents that you paid that $6,000. It will reimburse you $2,500.
Up to, which at this point,
in this case
really,
would be $2,500.
Yeah.
So let's say it reimburses you up to $2,500. Well, you're over $2,500, so it's going to reimburse you $2,500.
But it also does water claims and things.
It does everything.
That's what I'm saying.
Any type of claim.
If they did have the 25,
I hadn't got that far yet. Come on, Stephanie.
I'm so sorry. I'm just jumping ahead. That's what, I'm getting there. Yeah. So yes, up to $2,500 in this case. So now your deductible goes from $6,000 math wise to $3,500.
To $3,500. Now, you do have to pay the $6,000, but it does give you back $2,500, which you net out at $3,500.
Correct. And I will say we have had clients use this.
Correct.
And it is so simple. It is so easy. They get their check. They get, I've had senior
direct
citizens
deposit
doing that. Yeah, it is easy peasy, lemon to the squeezy.
Takes less than a week. Matter of fact, one client we have got their reimbursement check before they got their final check from the insurance company.
Yeah. So point is, this isn't like, well, gosh, it sounds really great, but no.
It works.
It's proven, used, done.
It's actually backed by a reinsurance company. That in our industry is well known, but it's also it is a program developed by Lloyd's of London. So people that know who Lloyd's of London is, they've been around for well over 100 years. They're known for insuring pretty much everything, like celebrities, legs, hands, faces, stuff like that. But they do literally everything Lloyd's of London does, and they are very well respected in the industry. So whenever I came across this, that was one of my first questions: who's backing it?
Yeah.
And they said Lloyd's of London and this other reinsurance company. I'm like, really? Okay, now you got my attention, because there's programs out there that, because we run into them like this. That one insurance company, that auto insurance company that we had that went under, that one that hacked me off.
Well, yeah,
I'm not going to say it either, but I helped get them closed. I literally helped get them shut down because they were screwing stuff up so bad that I contacted the state of Texas, which contacted me back, which then got contacted by the state of Oklahoma, and they were shut down.
That was a debacle.
Yes, it was. So you have to be careful. You have to be careful what companies you go with. Even people are looking to save money. But we didn't have very many clients through this company. We were very, very fortunate.
We were fortunate. Although
we just kind of tested them a little bit to see what they would do, and they ended up going downhill.
But to be fair, and so this is something to note as well, when you have a new carrier come in, sometimes it is nice to be like, oh, hey, gosh, you mean I can save 40%? And now instead of 6,000, I can save 2,400. Like, awesome. I love this. However, the conversation that we have and we've trained our people to have is, okay, they're new to the market. They are new to Dallas-Fort Worth. We are not sure how they're going to perform.
Correct.
You need to understand the risk, because yes, we want you to be able to save money and we want you to be able to do that, but we don't know where this company is standing. And to be quite honest, at any point in time, any insurance company can just flip the switch and say, we're done paying claims right now. Huge companies have done that. Huge. The number one in the nation has done that. And then along with a lot of some who have consistently do it, and they're like, oh yeah, like we know that they don't pay claims, and yet people still go with them because they're trying to save money.
Because they're saving money. I get it. I get it.
Yeah. So the point is, it's like,
not a judgment on the people. They just don't think they truly understand what's going on.
Yes, you just have to understand what you're getting, and then from there, what risk are you willing to take on?
Yeah. So
go ahead.
Let's go back to this program a little bit. The program. So like I have one client that we wrote it with just initially, recently. They could get a 2% deductible and pay X, or they could get a 3% deductible and pay Y, which was a lower premium. Yeah. There is a cost to the reimbursement program. It's like a whopping
$160.
No, it's two.
Oh.
It's two.
It's like 209.
219 or something a year.
Okay.
A year.
A year. So
and
it's
it gives you up to $2,500 back. And maybe it's $249. I can't. They literally just changed the numbers.
Change it, so.
Literally. But it's okay because it's still dirt cheap. And so what happens is
you're netting the savings.
The savings that she's had netted her like $1,000-$1,200
right.
in savings by doing it this way. It was crazy. So she's like, "Yeah, sign me up. I'll pay the $9,000. I'll pay the $9,000 in this case,
exactly,
and I'll get back the $2,500. So I'm netting out at
$3,500.
Well, at $9,000, she's netting out at $6,500 out of pocket in her case.
Well, no, because she's also saving the extra $1,000 in premium.
Well, okay, if you want to count that,
that's where I was saying the $3,500. So
she still netted down. So we look at that, and not every agency has access to this particular program. We were one of the first 100 in the nation to get it. Literally, one of the first 100 in the nation to get it.
Yep.
And so that is one program. It also works with with auto insurance. And I want to talk about that just real quick because we look at home and auto. Okay, let's look at your total out-of-pocket expense for insurance annually. So what we've been helping people do is like, hey, could you afford $1,000 out of pocket if you were to happen to have a claim of comprehensive or collision claim? Yeah, I could probably do it. How would you like to get that $1,000 back?
No, I could definitely do it.
The auto insurance portion
because what's the
will
most
reimburse
common
them up to $1,000.
Most common deductible is I want $500. I want $500 on my auto.
But that's just an average.
No, but that's the most common.
Yeah.
But then you jump up to $1,000, it significantly lowers your premium.
It can,
you get this other program to come in to pay the full kit and caboodle, and now you have a $0 deductible.
So we did the same with the same client. We did the same thing.
Yeah.
So she ended up saving like $4,000 or $5,000.
Because we are amazing, folks.
Well,
www.panatelagroup.com.
That's right.
One L. Go ahead.
One L. PANATELA group.com. No, she ended up saving thousands a year. And she
you said four. Don't backtrack now. Going hard with the
She was tickled to death, obviously.
Absolutely.
And the thing is, this works with a lot of people. Does it work with everybody? No. We don't have a problem looking at it and going, yeah, I don't think we can help you. That's not going to be a deal.
I mean, it just, depends on the situation. And then there are some people that are like, man, I'll just eat it, whatever. Like, whether I have a claim or
there are some people like, I don't want to spend the $200 and something for the program. Okay.
That's okay.
I mean, based on what I see every day, and it's not like we don't make hardly anything off that little program.
Well, it costs nothing. So you can't make anything if it costs nothing. I mean, we make something, but that's not.
Well, I don't even mind saying what we make. I think we end up netting maybe like $30 or $40 a piece on it. It's nothing.
Yeah.
It's nothing for us to worry about.
Yeah.
I tell my folks when I'm talking to them, look, this is about what I make off of it. I don't care whether you get it or not for my personal deal, but do you see the amount of money you can get back? And this is where it's worked. With this person, that we give them ideas. So that's one program we have that does home and does auto. The other thing is that in the state of Texas, and I think we may have talked about this before, in the state of Texas, it is illegal, not unethical, illegal for a roofing contractor to forgive a deductible, or any contractor for any reason to forgive a deductible. That is on the books as of 2019. You cannot
September
do that.
2019.
You cannot do that. It is illegal. The contractor and the homeowner can be fined up to $1,500 or $2,000 and or 2 to 6 months in jail. Okay. That is illegal. I would say that 80% of the companies out there that are doing roofing are still forgiving deductibles. Mm-hmm. And so what they will say is things like, well, don't worry about your deductible. I'll work it out with the insurance company. No, you won't. Because the insurance company is going to make you pay your deductible. You have to pay your deductible. It costs them money when you don't pay your deductible. You're thinking, well, why does it cost them money? Because they didn't have to pay it. I was going to have to pay it. Because that roofer or that contractor is going to do supplements.
And not to say that all supplements are bad.
What is a supplement?
A supplement is an additional discovery, an additional cost from added on to the original estimate.
Because the contractor says they found something that the adjuster didn't catch.
Sure. And sometimes
it's true.
Sometimes it's you have to uncover it, right? It's like kind of going in for surgery and you're like, well, I didn't realize that the liver was tied in a double knot until we got in here. And now we have to fix it.
Exactly. It was hidden.
So, right. So there's hidden damage and then there's also, but either way, a supplement. So it's anything that is added to the original estimate, period. Whether legitimate, illegitimate, but that is a supplement. It is an additional cost from the original starting point estimate.
Yeah, it could be. Yes, exactly. So what'll happen is these contractors will start sending in supplements that may or may not be true in order to make up that money on the deductible that they ate.
9, 12,
that cost insurance companies money because they end up paying. Because they don't always know if the supplement's legit or not, because unless it's something really wild and they go, no, there's no way that could be happening. You better send me a bunch of pictures and an explanation. And then they'll probably go, yeah, I don't think that was, and rightly so, they'll deny them sometimes. But for the most part, they're going to pay supplements for the most part.
A portion. They pay a portion of some. I will say we just had one where the roof was getting replaced. It got bought, so they were accepting the replacement of the roof, but the decking was an issue, but you can't really figure out the decking until you uncover. You can go in the attic and see a little bit. And so they're like, and then sometimes the conversation is just, anyway, it doesn't matter, but supplements are not all bad. But yes, to your point, that is a strategic move based on contractors to try to get the job, make it cheaper for the homeowner. But here's the thing that everyone needs to think about for a second. If somebody is cutting a corner there, they're not going to hesitate to cut a corner on your roof job.
No, that's where I was going next. They're going to use either inferior materials
or not do it correctly, or
instead of putting 6 nails per shingle, they're going to put 4.
Yep. Or instead of removing your existing felt, which by the way should be removed every time, they're going to be like, screw it. We're just going to go right over the top.
Or just leave it.
They're going to leave it and go.
No, I mean, not even put new felt down.
Well, either not put new felt or they're just going to layer it.
I mean, I've seen videos where they didn't even nail the roof down. They just let the tar, the tar strips on the shingles melt. And the guy got up there and grabbed one corner and just lifted it.
Holy crap.
Lifted almost the entire roof off by just walking and holding on to one corner of it.
Man, they put vents in places where there are no holes.
Exactly.
Just to show like, oh yeah, we gave you what do you call it? Airflow or
better airflow. Yeah.
Whatever it is. But the point is if they're going to be shoddy on that, more than likely. Oh, and by the way, here's something else. If you do use a bad contractor and you end up having multiple layers of felt, that's something that can be seen from like, hey, you can lift up on the corner on the edge of the house. And so a lot of these insurance companies now are also doing home inspections and they'll send somebody out and they want to look at the roof because obviously the roof is the huge expense in North Texas.
Correct.
And they will try to lift to see how many layers of felt do we have. And if they see multiple layers, they will deny you and they will not cover you because that's not a properly maintained roof.
So
you're putting yourself.
So what do you do then? You have to go back to that roofer and say, look, you didn't do this right. Well, guess where that roofer is now? Good
luck. Yeah.
They've moved on because you probably used one that
guy in a truck with a ladder.
Yeah.
Done.
Yeah.
If his number still
But I will tell you, even some of the roofing companies that are around here that are named roofing companies are doing some of the same stuff.
Yeah.
And it's unfortunate. But
so if you need
having said all that, let's say that you are concerned about, you want to make sure the roof is done correctly. There are roofers that do things correct. It's not a problem. But what happens when you can't afford the $9,000 or $6,000 or $9,000 out of pocket all at once deductible? Well, we have another company that we know of that allows you to pay that deductible back in installments. And it satisfies the insurance company that you have, because the law says you either have to come up with an agreement or you have to pay it, essentially. Well, this satisfies the agreement portion. And you can pay back your deductible in installments over 6 months, 12 months, 36 months, however long you think you need to pay it back to get your monthly payment down long enough or low enough for you to handle it. And there is, I want everybody to listen to me and look at me very closely. I don't know where all the cameras are here, but there is no interest. There is no credit check. No interest, no credit check. And it is the neatest thing. So the thing is, how does that company make money? Well, the contractor that is doing the work agrees to
take a hit,
pay that part of it. And so,
but a hit of the deductible. Remember, so at this point, they're not taking a full. So if that deductible is $6,000, the contractor's not taking a full $6,000 hit like they'd be taking if they're eating the deductible. They're taking a percentage of the deductible.
Let me say this. One of the things that we've found,
saying it just makes it more affordable for the contractor.
One of the things that we've found with the contractors is they don't get it. They do not get it. We have a couple of contractors in the area that are using this often as necessary, and they are knocking it out of the park with new business because people can't afford it, whether it's commercial business or residential, they're knocking it out of the park. But I have talked to a number of roofers. It doesn't have to be a roofing. It could be anybody that's doing an insurance job for property damage on your home or your commercial business. It works on both. The contractors don't get it, or they don't want to get it, or I just don't think they understand it from a business perspective, that how much more business it could bring them in. But the ones that have bought into it are literally knocking it out of the park with this. It is crazy what they're doing. So, but no interest, no credit check on.
But it is a contract. So understand that it is still a contract.
That's correct. It is a contract. Now, the thing about it is, for the contractor that's doing the work, as a contractor, you have rights and abilities. And normally, so somebody doesn't pay, you can take them to court, small claims, large claims, whatever it is, and you can put a lien on their house or whatever it may be, right? So this does not take any thing away from the contractor to be able to do in regards to that. So for any contractors listening to that, it does not take any of your rights away. As the person who owns the business or owns the house, it lets you satisfy all the legal agreements so that the insurance company will finish paying their final check and show that you paid your deductible and all of those sort of things. So it's a two-way street. It's good for both sides, and it keeps you both legal. So you don't have to worry about something coming back.
Right.
And so that program is another program that we really, really love that helps our clients out. Another program that we have is a tornado program, specifically for tornadoes. If you are in the path of a tornado, this program will pay you a minimum of $2,500 up to $15,000 because you are in the path of a tornado. And here's what I get asked. Well, what do they consider the path? The path is not defined by the insurance company. The path of the tornado, the swath, whatever you want to call it, is determined by the National Weather Service. So if the National Weather Service says that it was a half a mile or a quarter mile swath, and you were in that swath, whether it's a little at EF1 or EF5, whatever the things are, it'll pay anywhere from $2,500 to $15,000. And just to make sure that you don't get missed, they extend it out 500 feet on each side. So based on what the National Weather Service has.
Right, which is crucial. That's a huge...
And it's not a reimbursement program. It is a direct, here's a check for whatever the amount is that the program says you qualified for. And it's not a hard program. Cost on that, $88 a year.
And we make $300.
Yeah, right.
I'm just kidding.
Right.
I'm just kidding.
I think we make $20 off of it or something.
I'm just kidding.
It's a giveaway for us.
Again, it's a nothing. But
yeah.
So, and in North Texas, you're like, tornado? Geez, it's not like we're in Oklahoma. Let's talk about tornadoes.
Yeah,
Welcome
North
to
Texas.
Downtown Fort Worth. Welcome to Northwest Highway, like you were talking about.
Yeah.
Just end of 2018, 2019.
Burleson, Granbury,
Boom.
Weatherford, Parker County.
It happens.
Yeah.
It happens.
It happens.
And whether...
What about Wiley and Saxy a number of years ago? They got hit.
And again, and that's even, I mean, to your point, what you're saying is it has nothing to do with making a claim.
Mm-hmm.
It's where
you do not have to make a claim for this.
That's it. Where do you fall on the map? Do you qualify? And then for $88, God forbid something happened, a chance at either $2,500 to $15,000.
They'll even call you and say, "Did you have any damage?" This company will call you and say, "Did you have any damage?" And you say yes or no. It doesn't matter what you say; they're still going to give you the check.
Interesting.
$88 a year. You can use that check to pay your deductible for the other damage that happened to your house or your cars, or you do whatever you want to do with it.
Right.
Did I say $88 a year?
What?
$88
Sorry,
a year.
I was focused on Vegas.
Yeah, Vegas.
$2,500. I'm letting that ride on red, baby.
$88 a year. I mean, it's crazy what we have. Another program that we're looking at that we're trying to get is a straight, and I say strictly a wind and hail deductible buyback program. That for residential homes. We have that on the commercial side. We've had it for a number of years.
Okay.
So if you end up with a commercial policy, it's got $100,000 wind and hail deductible. That's not uncommon on commercial stuff. You can buy that policy down or buy that deductible down to say $10,000 if you want it. So you're buying wind and hail insurance on $90,000. Okay. Essentially the same thing on this residential program, but we're hoping to come out spring of next year is what they're telling me now. I think it's either going to be earlier than spring or later in spring, because why would you bring it out during the high season? But the highest risk season. But anyway, it is a wind and hail deductible buyback or buy down program where you can buy your deductible. Say you don't want to do 3% or 2%. You can buy it down to $1,000 if you want to buy it down to you can't buy it down to zero, but you can buy it down to $1,000.
Now again, always a cost there. So we
don't know what the cost on that is yet.
No, that's fine. Well, and because it's all going to vary, because if people are $5,000 and $9,000 deductible, but I only want to buy it down to $3,000, but my neighbor wants to buy it down to $1,000, it's a different cost. So again, it's us looking at what's the big picture, what risk financially are you how much are you looking to spend on this versus how much are you looking to risk if something happens? And we talk all of that through with the client. So it's just, that's the big thing.
Yeah. Right? And what I do is,
but it's nice to have options.
I don't do a lot
of,
say no. Yeah, exactly. I don't do a lot of home and auto anymore. I do mostly commercial. Our folks do the home and auto.
Correct.
But when I do a home and auto, and I'm teaching our folks how to do this, one actually does a fairly good job at it. But I will put it on a spreadsheet. Here's what I'm proposing to. Now I'm going to give them the actual quotes from the insurance companies, but so you can see it on paper. Here's the cost of the home with this deductible. Here's your out-of-pocket deductible. Here's the cost of the auto. Here's this deductible. Right. Blah blah blah. And then I will put on there, and then I put the premiums down, straight premiums. Then I will maybe have another section, a lot of the same information, but it'll say, okay, what if we did this to your deductibles, raised your deductibles, put these programs in, here's your total premium. It's higher, but if you have a claim.
Sometimes
it's higher.
Sometimes. It's not always.
Not always. But at least they get to see it. Maybe it may be a $500 difference, maybe $1,000, or like this one lady, it was like $4,000 or $5,000.
So again, it's just painting the picture, and you just, regardless of where you go for your insurance needs, obviously we would love to be those people for you in our agency, but you just want to make sure you're asking the right questions, right? The whole thing of this is arming you guys as consumers and saying, how can I get some sort of reprieve here? And the answer to that is ask questions. We're trying to give you the information, ask the questions. And if your agency knows nothing about it, then call 817-753
That's right.
0093.
Yeah.
But no, and then we can walk you through all of that.
Yeah, because we do try hard to look at things differently and come up with new programs.
Right.
For folks.
But if your agency already has that,
then use them.
We're not but just know what questions to ask. So I think that's really the big thing is how everybody is so concerned with the cost of insurance.
Correct.
Regardless of what style, well, I say what style, what line of business it is, but right now, specifically the home. And these are a few ways of being able to limit your exposure being in North Texas. If you end up suffering a loss, or just you never suffer a loss at all, but you got to get the payment down.
Yeah. And so two of these programs, I know for sure that we can do nationwide. They don't even have to be our client.
Oh, okay. And that's okay. So that's a good point. And then we'll wrap it up. But so with any of these, so let's say that you love your agent, you love your broker, whoever it is, and you're like, gosh, okay, well, I asked them these questions and they have no idea what's happening. We have no problem. You don't have to switch everything over to us. Just call us. We have access to the programs. So if that makes sense, we'll give you whatever quotes you need, and then you go from there, and then you get to keep Mr. Joe Schmo over there as your agent. So that's no problem.
That's right. So
our whole
deductible
goal is make sure you're protected, get you educated, and then go from there.
That's right. So yeah, we can write some of these programs anywhere. We don't have to be licensed in states or anything along those lines, because they're not really insurance products. It's like the reimbursement program is not an insurance product.
Right.
But it's designed to work with insurance products, but it's not an insurance product.
It's a tool, right? It's not your insurance plan. It's
right.
a tool.
So there's little things like that we can do. Whatever, if you have friends or family, or if you're listening to this and you're in states like, I don't know, Missouri, Indiana, Illinois.
I don't know, North Carolina.
They
took a little bit of a hit.
So yeah, I mean,
Florida,
it'll work. Yeah, it'll work for those folks. Not on your existing claims, but future claims. And so. Anyway, I think that's about it for today. We're going to wrap it up. But again, this is Insurance Gone Wild. Let me repeat that we want to try to bring some sense to this craziness that is in the insurance world so that the everyday consumer can understand it. And we are always going to shoot you straight. You may not like it.
You may not be able to walk straight.
Yeah, you may not. That's right.
You may catch us on a bad day. No,
that's right. Kidding. No, I mean, our goal is just to lay it out there and let you guys make a decision. You can agree with it or not agree with it, but this is kind of how it works.
You have the information.
We're not trying to hide anything. We're actually trying to take the mask off so you can see some of the behind the scenes stuff without getting too deep in some of the craziness of the behind the scenes. But anyway, that's it. Thank you all for joining, and see you next time. Thanks.